I've always looked to what Jim Sinclair said, called it MOPE, Management of Perception Economics, that seems to rear its head at the beginning of every one of these conflicts, where we will see management of the escalation of the metals prices. We will often see the equities markets outperform. We will see dollar intervention, the dollar stay strong. In other words, the last thing that the powers that be want in the midst of some sort of a global conflict is to see gold and silver go to the moon, the dollar to sell off, the markets to tank, as many people would expect. The financial engineering is always something that amazes me, the ability of what they're able to do. But I would say that this will be, at least in the case of gold's up a little bit, silver's sold off. And, on top of everything, this comes in the face of what Bank of America just said, maybe one of the boldest silver calls ever. Their head of metals research, Michael Widmer, I think is his name, said silver can reach between 135 and 309 by the end of this year. He wasn't even talking about this. He was talking about the gold to silver ratio and the reality that silver tends to lag gold early in the bull market, and then later stages it moves violently. So anyways, the bottom line is that what we are seeing globally, I think, is probably far more impactful than the markets will lead us to believe, at least initially. So I would urge everyone to pause and have a little caution in terms of the way they think things are going to play out here over the next several days, and we'll see what happens ultimately to the price. To your point about Rick, far be it from me to ever question the wisdom of someone like Rick, who has seen more than I have and might be one of the smartest people I've ever known. But I will say one thing: if I were going to try and quietly push back against Mr. Rule, I would simply say that yes, this is true, especially when no one ever stands for delivery. But the amount of delivery that we see is making naked shorting a very, very dangerous game, and continues to play into the hands of those that are standing for delivery. And I think that that's really the crux here. What is changing the landscape of the metals market, in my mind, is a system that has lost its integrity, and a system that no longer carries the kind of trust that it needs to have to be the global benchmark. When you see a market in continued backwardation that is normally never in backwardation, it's normally in contango, where the current price is less than the futures price. The futures price takes into account interest, storage, the cost of money. But for a long period of time, it continues to trade in backwardation, meaning we want it now. We don't trust the future. We don't trust the exchange. We don't trust any of it. We want it now. When we see repatriation from the central banks, from the Bank of England, the New York Fed, that means we don't trust the system. And when you see in the month of February, roughly 15 million ounces more delivered off of COMEX than was delivered into the exchange, or should I say leaving COMEX than was delivered into COMEX. In other words, 15 million more ounces left the building than deliveries can explain. You begin to understand a trend, and that is a trend of erosion of confidence and trust in the paper market, continuing to short that market when there are very well-heeled and sophisticated traders, from central banks to sovereign wealth funds, standing for delivery, where price misdirects most people and most institutions, but not these folks. It's a dangerous game, and it's one that won't end well, in my opinion. You're beginning to see that. Now, I would simply say, if I had to guess, the folks that are standing for delivery are far more sophisticated than they are emotional. And the emotion is, well, they continue to be able to do this. How can they continue to do it? How can they continue to suppress the price? They'll do it indefinitely. But they won't, because the demand for delivery continues to outpace expectations, continues to outpace any precedent. And so this is the little by little by little. And that's the part people have a hard time with. This entire era of instant gratification, and it not being fast enough, I think, is being attacked methodically in a very regimented way, where they will continue to slowly bleed dry the exchanges at a manner that doesn't stop everything in its tracks by just throwing all the money and say, no, we want delivery. They will play the game until the game is no longer able to be played. So I don't know. I just think that Rick is right from a standpoint of recency and normalcy bias. But if indeed these deliveries continue the way that they have, these games will end up being an existential threat to those that are silly enough to suppress the paper price to that degree. We're seeing the Western markets and the hegemony associated with them be challenged simply through rules that they employed themselves. Now, in an effort to mitigate said rules, 4 times in 2 months, we see markets that glitched, right? Twice to the up, twice to the down. When they fell both times, oh, sorry, the circuit breakers broke. We apologize. Don't do anything about it. We just let it collapse. And on the way up, oh, sorry, it overheated, and we didn't even figure out what the last one was, where the market was halted. Trading was halted. In both cases, they got slammed. And then in both cases, well, we haven't seen what will happen here. But last time this happened, silver went up 120% in 60 days. So we'll see if that happens again here. But what you are witnessing to me is the realization by some very big money traders that they have these Western entities that are playing this game kind of trapped in the respect that let them keep playing their game, we'll keep standing for delivery. And you can see that in the ever-increasing delivery numbers. Someone or someones are saying, fine, go ahead, knock it down. We will continue to stand for delivery. And that plays right into the hands of those that look at the dollar price as one that is certainly valued, I think, less than the dollars used to buy it, or more than the dollars used to buy it, rather. They don't care what the dollar price is. They're continuing to stand for delivery. And when you see the outflows out of COMEX outpacing the deliveries into COMEX, that's about as rare of a bird as it gets. So you're beginning to see the other side of the coin quietly playing their hand right into, I think, using the manipulation of the Western banks to their advantage. So it's not going to last forever. It's frustrating that it continues to last, but these are desperate acts by desperate entities who are playing by rules that are beginning to become obsolete, in my opinion. Fiat money can be created in effectively unlimited quantities. Hard assets cannot. Gold cannot be printed. Silver cannot be printed. Copper cannot be printed. Energy cannot be printed. And I think once you really understand that, you begin to understand why hard assets matter so much in an age like this. And I think there are those that are beginning to realize that for decades, markets have been dominated by the West and by paper and by leverage and by derivatives, by financial engineering, by narratives and interventions and price management. And I think we're moving back towards a world where physical supply and demand begin to matter a whole hell of a lot more than paper positioning. And when that happens, something very important changes, and that is price begins to reconnect with value. That's a big deal. A paper market can suppress price for a long time, but it cannot suppress value forever. And I think that is the most important question of all, or leads to the most important question of all, is what is the value of a promise that cannot be kept? And a buddy of mine, Mike Savage, writes about this all the time, and that's one of the things he always asks is, what is the value of a promise that cannot be kept? I agree. What is the value? I mean, the value is not very much. And I think he also would say, what is the value of a currency that cannot be constantly diluted to survive? What is the value of sovereign debt that can only be serviced through more debt? These are all things that Mike and I talk about and he writes about. But, you can go all the way down. What is the value of entitlements that are mathematically impossible to honor? What is the value of paper claims on metal if everyone suddenly wants the metal itself? What is the true value of assets whose prices have been artificially suppressed for decades? Once that suppression begins to fail, I think things become very, very interesting. And that's why gold and silver matter so much. It's never just been a commodity. Gold, since ancient civilizations, gold has been treated as something different, transcendent. And I do, if we have time, want to talk about, I was just thinking about it the other night. I'm trying to relate it, going back as far as I can, to the way that cultures look at it. So at the end of this, if we have